Okay, everyone, we can go ahead and get started. Thanks for joining in on our webinar. So this is management liability, protecting your directors, executives, employees, volunteers, and not-for-profits, charities, and societies from Front Row in partnership with BC Alliance. So Front Row, we provide insurance and risk management consulting services for the entertainment industry. We operate out of 7 offices across Canada and the US. Our senior account executives have 20+ years of experience providing expertise wherever and whenever needed. Front Row specializes in providing insurance solutions for a number of sectors, including the sectors that you see listed here on this slide. I'm Grant Patton, VP of Marketing at Front Row, and I'll be your moderator for this webinar. I have about 7 years experience in insurance. I worked previously at CSIO, which is an insurance industry member association in a marketing role, and I joined Front Row last year. I'm a graduate of Ryerson and U of T. Steve Beatty, the founder of Culture One, which was acquired by Front Row. Steve brings over 25 years of experience in arts and entertainment insurance to the table, everything from the performing arts to TV and film. As a theater manager himself for many years, his heart is in the arts, and he's a valued supporter of many cultural initiatives. He knows what it takes to bring an artistic vision to completion, and he'll make sure you sleep easy. Rob Gog, an artist himself, studied animation at Sheridan College and film and TV production at Humber. He talks the talk and walks the walk, and with 14 years of insurance expertise behind him, knows what a studio needs to keep the creative flow happening. And best, he'll help you prevent problems from occurring. He's probably the only insurance broker with a sketchbook on his desk. So a bit of housekeeping in terms of asking questions and whatnot. You can go ahead and type them into the questions pane found in the GoToWebinar control panel, which should be displayed on the right of your screen. You see highlighted there in the slide, the questions, the pane of the control panel. So you can go ahead and click the top left of the control panel to move the panel in and out. And if you're interested, you can also download a copy of the webinar slides by clicking under the handouts drop down. The PDF is in there. So we will try to answer questions throughout the webinar, but we do have a slide at the end specifically where we will talk about questions as well. So I do have to provide a disclaimer here that the information provided in this webinar is to be used as a general reference only and is not intended as advice for any particular situation. In all cases, actual coverage is subject to policy language, terms and conditions of the long form policy documents issued by the insurance companies. And with that, I'll let Steve and Rob take over.
Thanks, Grant. I am Rob Gug, as Grant mentioned, and today we're just going to be talking in regards to the management liability, as well as some of our goals for today. Wanted to advise you, or at least inform you, who's at risk with your organization, commonly where do claims arise, how you can protect yourself and your organization from claims, as well as mitigating claims once they do happen, because obviously that's a possibility. Things to think about when you're reviewing your insurance, and also the BC Alliance for the Arts Management Liability Program itself. So here's a word cloud of common phrases that we typically see when discussing non-for-profit charitable organizations, societies. I'm sure a lot of you have come across any one of these words, and they're very common in terms of day-to-day operations for a non-for-profit or charitable society.
Thanks, Rob. Hi, everyone. It's Steve Beatty speaking now. As Rob said, we are going to talk about management liability, and when we think of an organization and the individuals that run it, obviously a legal entity doesn't have a voice of its own, but it is set and it's developed and designed to have a certain mandate, a certain function, a purpose, and it's all of the people that are involved in the organization that will help fulfill that mandate, that will make the long-term planning and the strategic decisions around it. They'll manage the assets and the financial cash flow of the organization, all of the individuals that work within it, all of the human resources, and then obviously how the board and the organization is going to be governed. And this all falls back on individuals. And those individuals are required, and this is important, all of those individuals are required to act in good faith and be honest in their fulfillment of their duties. Their loyalty lies to the organization, to the society, to the not-for-profit entity, and they have to be loyal and obedient to that organization. And when they make decisions, they're always making decisions that are in the best interest of the organization. And by virtue of that, they have to avoid conflicts. Individual board members, management need to be very, very careful of ensuring that that they aren't conflicted in any way, that they're not going to see any personal gain from a decision that they're making when looking at a decision.
Okay, thanks, Steve. So in regards to a board of directors or with respect to the management liability, there are typically, Steve and I discussed this today, probably over 200 federal and provincial statutes which may place personal liability on your directors and officers organizations. These are just some of the common ones. Again, I'm sure there are a laundry list across Canada, but some of the most common ones we see: Canada Business Corporations Act, Canada Not-for-Profit Corporations Act, the Environmental Protection Act, Child and Family Service Act. Basically, all of these would in some way, shape, or form have some sort of impact or regulation with respect to your board of directors and your organization.
And Rob, one of the problems too that people have when they join boards is because, as you said, there's hundreds of acts of legislation that places personal liability on people. You don't really know as a board member, in many cases, what liability you're taking on, and the average person really isn't aware of that.
Yeah, true.
Yeah. So to Rob's point is about the personal liabilities. He mentioned the statutory liability, but there's also a few others. There's the civil tort being just the wrongdoing, an allegation that the organization or an individual in it has done something negligently, wrongfully, that has now disadvantaged the person bringing the claim. Criminal actions can, under the criminal code, can be an exposure for individuals, and then different liabilities assumed by contract. Some of them that tie into that, Canada Revenue Agency, Rob mentioned that when he was looking at the statutory liability.
Very timely because taxes are coming up,
yeah,
right?
Taxes are coming up. We're all thinking about our tax liability. Funding agencies, this is a big one in the arts. Obviously the organizations, all organizations who are not-for-profit are somewhat dependent on different levels of government funding, perhaps funding coming out of other foundations or endowments. And this places personal liability on individuals. And a lot of people don't think about that when they're involved in perhaps getting money from Canada Council or a municipal government. Claims by employees, volunteers, obviously lifeblood of many not-for-profit organizations are its volunteers, are its employees working very hard all the time. Bill C-45 is an interesting one because Bill C-45 actually falls under the Criminal Code of Canada. And it was a result of the West Ray mine explosion where criminal charges were brought against individuals in the management of that organization with respect to the occupational accident that happened there. And then in a variety of different contracts, you could be assuming liability. Again, day-to-day contracts, lease agreements, things of that nature could start placing those personal liabilities on individuals.
So we're here to talk about a duty of care. A board of directors, management group would always have a duty of care to their organization as well as their employees. We've written here the care, diligence, and skill that a reasonable, prudent person would have exercised in comparable circumstances. That's essentially the crux of what you want to think of in the event of an incident, a claim. What would a prudent person or a reasonable person have done in a similar circumstance? And you'll find that in those events, you want to use your best common judgment, but also the duty of care is very key there. Best business judgment rule, that a director and corporation acted on an informed basis in good faith and in the honest belief that the action taken was in the best interest of the company. And we like to think that that is a very common practice, but I'm sure if you read a newspaper or see anything in the media, it's not always the most common rule.
You know, and it's interesting because when it comes to, you know, often many of these decisions are looked at retrospectively as a result of a claim, or perhaps the courts are looking at it, perhaps a mediator are looking at it. And I think it's always important when to consider both the duty of care and the best judgments rule. Duty of care is, as Rob said, making an informed decision, doing something that, you know, is reasonable, and making sure you have the facts and an understanding enough to make a solid decision. Courts tend to look at, and whether it's private companies or not-for-profit companies, they'll tend to look at it from the standpoint, you know, after a decision's been made and there's been perhaps a negative outcome, it's easy to say, well, that was the wrong decision.
Right.
But it's not necessarily the case. You know, it's a case of, did they make an informed decision? Did they make it in good faith? Did they do the honest belief? It's not about undoing the you know, the time on that.
So let's recap. Board and management, people are responsible for looking out for the organization, and we've highlighted people there because in a management liability context or a board, people are one of the most important, if not the most important asset. People are exposed to the outcome of their decisions when managing the organization, employees, volunteers, and other business relationships or stakeholders. Again, as we've just referenced, a reasonable level of care and diligence. That's going back to Steve's point of the duty of care and liabilities imposed by law and from claims brought by government agencies, other organizations, as individuals, as we saw with some of the federal and government bodies that we've highlighted previously.
So the big question is always, where do these claims come from, and why, you know, why do these claims exist, and how do you protect yourself? So claims can come from really any decision, if you make an error, if you make a misjudgment, you make a misleading statement, you inadvertently breach your duties in some way with respect to the financial management of the organization. Use of funds, how do you use donated property? If you have a foundation, are there restricted funds or property, and how were those funds dispersed or utilized? Claims from managing people in general is a huge exposure for people. And this can be in the hiring process while you're managing and supervising them. And then, of course, if you have to terminate a relationship with an employee, that does definitely present a fair number of claims. And what we would see in our business is a lot of claims coming from the managing of people.
Yeah, I will say we're going to discuss it later on, but it's one of the largest component of claims across Canada related to employees, volunteers. But again, we'll expand on that later on.
Yeah, and the claims also, probably aside from the employee and the individual people bringing claims, a huge source of claims, again, not-for-profits, is related to government agencies bringing those claims, public funders, private corporate donors. Those are all exposures to a not-for-profit organization because they're donating, they're giving money to help support the mandate. If anything goes off track, that can be a source of a claim. Students, patrons, visitors, volunteers, all of these other stakeholders essentially that are there and involved with the organization can be a potential claimant at some point or another.
So when we're talking about insurance and we're talking about managing risks, here are just some of the common areas where we focus on, but could also potentially bring claims forward. Management liability, which we're discussing now. We do also discuss commercial and abuse liability. Privacy is now becoming a huge component with social engineering. IP, intellectual property, obviously in the arts, when you're creating something, how to not infringe on somebody else's copyright or work. And then another area where we're seeing a big uptake in claims is fraud, but especially cyber crime. As things get a little bit more sophisticated, Steve and I have been in a number of seminars where we're finding that the cyber criminals are also becoming a lot more sophisticated to target.
So management liability is a bit of a banner phrase, and the one thing, and we'll talk about it, is the BC Alliance offer a very comprehensive management liability program for their members. Towards the end of the presentation and the webinar, we'll talk about those. But management liability is designed to provide personal protection for the directors and the executive. So this is going to be, again, the individuals that are managing the organization. It also will respond to a claim brought against the organization, so the not-for-profit, or when that organization is required to indemnify one of those individuals for expenses they're incurring related to a claim that's been brought against them. So that is the, you'll often see in the bylaws of an organization, there'll be a indemnification clause that'll state this. And when you get into it, it might be an affirmative. It could also be a little different. What we like to see and what we recommend to our clients to see is that the language being that the organization will indemnify a director, an officer, an individual in connection with any expenses incurred for a claim from their carrying out their duties. Some of them will say may. The may gives a little bit of a little wiggle room for the organization, and in which case, you know, it's not ideal for the individual person. Employment practices all comes under this banner of management liability. Rob will expand on what the employment practices liability coverage includes, but this is all, as the name says, it's really related to situations with, could be termination, hiring practices, discrimination, what have you, with your employees. Third-party liability falls in under this, and what this is for discrimination, harassment, or defamation brought by an individual who's not an employee. This could be, Rob will, again, I'll expand on it, but this could be volunteers, it could be patrons, it could be other people who have a relationship and who are associated with your organization. And fiduciary liability, we will touch on it a bit. Generally, we only see an exposure for this in larger arts or not-for-profit charitable organizations. These are organizations that are managing a pension or an investment or retirement savings plan on behalf of their staff. And when you have that, when you're managing those funds, this does bring in an exposure not only on the organization, so you're not for profit, but it also brings it on the individual that's dealing with the funds manager. So the personal liability protection goes back to what we were talking about with respect to the statutory liabilities, the contractual liabilities, the civil liabilities, and also the criminal acts. It's reimbursement. When you get in, I talked about the indemnification. When you have an organization required to indemnify that individual, then what we want is we always want to have an insurance policy that will step in and actually reimburse the organization for that indemnification so that the organization doesn't have to bear that cost on their own. This again touches on it a little bit more. In all of these cases, what we're dealing with in many cases, and one of the really important parts of these policies in this form of insurance, are that it will respond to the legal fees defending a claim. Ultimately, there may be costs necessarily incurred to settle a claim. It could be through a mediation, it could be through a court award. But what we see in many of these claims is the ongoing legal proceedings that take place in order to establish, was there any negligence? Is there any fault on the part of the individuals? Is there any liability in the organization of those individuals? Establishing that is where a lot of these costs lie. And as a result, the legal fees can, in many cases, can outweigh what the actual final settlement are.
Yeah, we're gonna expand on some of those, but as Steve said, the legal fees in some cases may not surprise you, but they are going to be expensive. So here we're talking about employment practices liability. I do want to jump in, and I know we've touched on it briefly, but one of the most common questions that I get is, especially for a non-for-profit, is we don't have any employees. And I think the idea is to always look at the definition through the policy of what is an employee. It typically is somebody who works at your direction or on your behalf. So it doesn't necessarily have to be the traditional sense of somebody who has a T4, for example, or works, you know, a 40-hour work week as an employee. That might be a bit of a misnomer in the non-for-profit performance space. But we've touched a little bit here. Employment practices, as I said earlier, probably one of the largest component of claims that we see across Canada. And again, dealing with these claims can be expensive. Sometimes it may be innocuous in terms of settlement or a disagreement on severance. But some of the other ones, which can obviously in this day and age, we're talking about workplace bullying, toxic work environments, you know, workplace harassment. Again, there are a number of here. I don't want to touch on every single one of them, but it is one of those areas where we are seeing a big uptake in terms of somebody who is unhappy at their work, or something has happened where they are then blaming either the board or the organization and looking for compensation.
You know, Rob, like we see a lot of human rights claims being brought, and it's interesting that all the provinces have a human rights commission, a human rights tribunal.
Yeah.
And when a complainant decides to file an application or file a complaint, they don't have to hire a lawyer. They just basically are completing a form that's necessary, providing the details. But I will say that every time we get involved with a client on a human rights complaint, we generally, and on a relatively straightforward one, we're generally going to see about $30,000 to $35,000 of legal fees incurred just to manage that.
Yeah,
because as an organization, you're not going to manage that process yourself. You're going to want to have proper legal counsel and advice. And this is one of the things that we look to the insurance to do, is to pay those legal fees for you.
Yeah, absolutely. And again, as Steve had mentioned earlier, we're talking third-party claims. That's going to be anybody, again, outside of, I would say, the direct relationship or under the direct purview of the organization. So that could be claims from, again, volunteers, service providers, I think patrons as well.
Yeah, for sure.
Independent contractors, invitees. Again, we touch on discrimination. This is typically you want to make sure, and again, we can always provide advice or details about it, but typically you want to make sure that your directors and officers policy has a third party limit of liability, typically equal to your primary limit. Again, discrimination, harassment, including emotional or sexual, I guess, distress, would be one of the areas as well that third-party claims could arise from.
So we're going to talk about a few different claims. We thought it would be helpful to share some examples of things that we've seen, things that we've been involved in, and just to try and illustrate some of the points we've just gone through. So
yeah, I think from my standpoint and a lot of clients that I talk to, it's always good to give claims examples, because essentially that's where, you know, for lack of a better term, that's where the rubber hits the road in terms of what is your policy responding to and what are some of the unknowns that could pop up. Here's one example. A Canadian Performing Arts organization is granted a federal grant to produce a specific project. After the deadline for the final reporting is passed, the agency notifies the organization management and board of directors that they are seeking reimbursement of the funds, as the project was never produced. The board of directors has changed since the original board of directors at the time of the grant, but they're being held accountable now for actions of the board of the past. The previous board resigns but incurs legal costs to be removed from the agency claim before a legal claim was initiated. And I think this one's kind of personal for you.
It is kind of personal. Actually, this is a situation that I found myself in when I joined an organization's board many years ago. And it illustrates a couple of interesting things. First off, that organization did not have management liability coverage. It was something we were going to do. We were trying to, relaunch the company. And unfortunately, this situation did come to light. My peers on the board, we were provided with a letter from a federal funding agency saying that that this had occurred and that these funds had to be paid back. And unfortunately, there was no money left in the coffers to do that. And we did manage to resign. We did manage to be removed from the agency's claim, but I did incur legal costs to do that. And it illustrates a couple of things. A is the importance, obviously, of the coverage, but the other thing is the fact that even after you resign from a board, you're not relieved of responsibilities of decisions that were made while you were active on that board.
Yeah, actions of the past, right?
Yeah.
Are coming back to the current board who ultimately had
Yeah.
nothing to do
Yeah.
with the past decisions.
So now, had that board, had we remained on the board and had to deal with it, yes, we would have been accountable. We were very fortunate we were able to get out of it. The other side of it is there's a likelihood, and I didn't follow it through to see what happened, but there's a likelihood that the previous board members could have also then been notified and brought in.
True. Yeah.
And held responsible long after they had resigned from the board. So here's another one.
A union worker brings multiple claims against a variety of venues alleging breaches of corporate policies, union rules, and that the worker is experiencing various forms of harassment. Millions of dollars have been spent responding to these complaints. So again, this looks like it would fall under the EPL.
Yeah, it could be the EPL or the wrongful acts, the
acts.
third-party wrongful acts. And the reason I say that is that as a union worker, the question always is are they an employee or are they a third party? And this is a situation that it brings in discrimination. So you've got human rights elements there. Harassment is also obviously human rights, but also how does that tie into the union rules? What are the protocols that those venues have with respect to harassment and discrimination? Do they have policies, anti-harassment, anti-discrimination policies? And this is an example of how it can go touch on a lot of different areas of an insurance policy. And again, this one literally is costing millions of dollars to manage.
So we do have a question here. So if an organization doesn't want to get insurance, can an individual board member get insurance?
That's a great question. And there's not any products that I know of that are available to individual board members unless they're able to get it through their personal insurer. And the only insurance company that I know that will provide personal board liability coverage is Chubb Insurance. They're the only ones I know, and that's only when you're on a not-for-profit organization. It's a great product and something really that more companies. Well, I want to touch on that just a little further. One of the things that you often see, and we do have it on the BC Alliance program, is you often will see an amount of insurance on the policies. Now, this would be one carried by the organization for the board. You'll often see a dedicated amount of additional insurance available for the personal liability of the individuals, so that if the shared amount of insurance is eroded and reduced, those individuals still have an extra dedicated amount. Right? But yeah, there may be other personal insurers that will provide that, but the only one I'm aware of is Chubb.
Yeah. Here's another claims example. Staff member is dismissed abruptly due to a complaint brought by an intern. The former member brings a wrongful dismissal claim which alleges discrimination and loss of future career opportunity. Organization incurs significant legal fees and financially settles prior to a court trial. I don't think this is an uncommon situation, especially in the arts, especially in this climate.
Could be a volunteer, could be an intern.
Yeah, definitely the employment practices here as well, but the wrongful dismissal, discrimination, those are all going to be triggers. And again, the legal fees, I'm assuming significant is probably an understatement. I would think.
Yeah, so when you have an individual like this, a staff member, because you really potentially have two claims here, right? You could potentially have the intern bringing some sort of claim. We're not saying here exactly what the complaint was, But the intern, let's say this was a harassment situation. They could potentially be bringing a claim as well against the organization,
Yeah,
right?
absolutely.
Saying that the organization failed to enforce a safe working place, failed to enforce their own internal policies with respect to harassment or discrimination or whatever the source of the claim was. But then you've also got this, as we talked about, this abrupt dismissal of a staff member because this complaint was brought. So yes, potential claim relating to discrimination, wrongful termination, but also this loss of future career opportunity is very interesting because, depending what sector within the world of not-for-profit you're in, they're relatively small. And if somebody feels that their reputation has been tarnished, perhaps this, because what we know about these claims, particularly if there's any media attention, is we know that everybody sees the start of the story, but not the end.
Yeah.
Right. Nobody ever sees the retraction. So
Exactly.
so this individual could feel that they've suffered significant harm. And this is taken from a situation that we've dealt with. And as in many cases, these are settled out of court. Many of these things never go to a trial. They might be mediated or they might just be handled. Source of claim in this one as well can be the manner in which that complaint was handled. And
True. Yeah, from the level of the board and from the respondents as well. Like, did they do anything? Were they aware? Were they notified? What did they do with that notification? There's a number of
and
aspects.
how did they investigate it?
Yeah. Or did they investigate?
Yeah, it's very, and that's a whole other topic that's very, very interesting to delve into. Is how should you investigate a complaint that's been brought by an individual? And how do you do it in an unbiased way? Who's able to do that? And how do you do it so it's fair for all the parties involved?
Okay, we got another one here. Volunteer files a complaint with the Provincial Human Rights Commission alleging age discrimination. The organization incurs $35,000 to respond to the complaint and agrees to a monetary settlement. And then a second complaint is filed with the HRC when a family member's volunteer application is declined by that same organization. Yes, another $35,000 was incurred in legal fees to manage the complaint. We're essentially talking two different claims here.
Two different complaints. Yeah.
Against the same organization.
Yeah.
Realistically, it would still fall under two separate incidences. So realistically, that would be two separate claims. Again, I can only imagine the 35,000 seems to be the common thread here.
Yeah.
So I can't.
Well, it seems to be, right? Like it always seems to be that. That's what we see. And this has obviously an element of discrimination. You could also have an element of perceived or alleged retaliation.
Yeah, absolutely.
Like retaliation,
Against the volunteer.
Yeah. So you have that issue. You also have, I don't know, what else do you have in there?
It is from the Provincial Human Rights Commission, so who knows if there was action taken by them even further in terms of fines, penalties,
that's
along those lines,
Very
right?
So
yeah, I think they I mean, those two incidences would be back to back.
Well, the thing I was going to touch on, I lost my train of thought there, but is how an insurance policy will respond to claims of a similar nature by multiple claimants, right? And that's an interesting thing because they talk about interrelated claims. So question is, do you have two claims here? Do you have one claim? Are you sharing? Is it the common nexus as one person?
Yeah.
That was treated as two claims.
Yeah.
But what you sometimes run into is if you have multiple claims brought against one individual and say, for instance, a workplace harassment, they generally will be considered to be one claim. So when you're considering your amount of insurance, you need to think about that.
Yeah, because that would
claimants sharing the same amount of insurance.
Absolutely. A charitable organization, with the consent of the board of directors, entered into agreement with two fundraising companies. After complaints are received by a government agency, it is determined that 76 to 80% of the raised funds were going to the contracted fundraiser and that the balance were not being used for the charity's mandate. The court concluded that the actions of the fundraiser were the actions of the directors. The charity directors and the fundraiser were required to repay $740,000 plus a penalty of $50,000 on the directors. these are astronomical numbers, right? Like it's not a small
The
amount of money.
percentage too, like just
The percentages are very high. Again, touching on across a number of claimants, could also have, I don't know if fraud would ultimately kick in here, but definitely the claim against the board and the penalty against the board of directors, not to mention the repayment. Right?
Yeah, and in this case, this particular claim, there wasn't any fraud. It was a decision made by a relatively small board to do this. But what's interesting about this is that you touch on the fact that the actions of the fundraiser were synonymous with the directors. And so you, in these court settlements, you'll often too have something called joint and several liability. And what that means is that even if one party's deemed to be 1% responsible and the other party's 99%, if the other party who's responsible for 99% is unable to meet their financial obligation to settle the claim, the 1% party is now responsible for 100%.
Yep.
So it's joint and several liability. Now, this was a pretty extreme case, but this is a very real case of a situation where an organization, made a decision that really wasn't in the best interest of the organization. And, there might have been some self-interest, but to my knowledge, there was no fraud in that particular.
And think of that limit
situation.
too, right? So 740,000 plus 50,000, you're at 800,000 almost.
Yeah.
And that's a lot of money.
Got another question here. What is an unbiased way to investigate a claim like that one with the intern?
Great question. I had lunch with somebody today this week, who specializes in this, and we were talking about it. And the general feeling is that within an organization, it's very, very difficult to have an unbiased person to be able to investigate it. So our recommendation is always to utilize the services of an independent third party. You shouldn't use a peer organization. You shouldn't go to another company that's not your company and get people from that. You need to contain the information out of respect for privacy of the individual with whom the complaint's been brought against. So you have to make sure that it doesn't then all of a sudden becomes common talk within the community,
Yeah.
right?
And
So
as you said, the arts community, the nonprofit community is very small. Everyone talks.
Yeah.
The majority of them all know each other. So something like that, you really want to keep contained. But as Steve said, I think an independent third party is really the only way to go, because how else do you prove non-biased?
Yeah, and the whole thing is, as well as bringing the independent in is important. There is a cost, obviously, to that, but it's very easy for a claim to be brought against an organization based on how a complaint was managed and handled. So it is the best way to do it. And I think it also depends on the scale of what you're dealing with.
Yeah,
as well.
absolutely.
I mean, you have to use some judgment, because there obviously is always going to be a little bit of perhaps friction or in an organization between employees. So I don't think every complaint needs an independent, obviously.
No,
but
you got to use your judgment based on the cost.
Idea. Yeah. I had as mentioned fiduciary liability earlier. Again, just to refresh everybody's memory on that, that is if you have a pension, a retirement savings, an employee benefit program, profit sharing plans, really we obviously don't see in the not-for-profit world. But if you have one of these, it is important to make sure that your management liability extends to cover the liabilities not only of the organization, but the staff administrators on the plan.
So here we're going to talk about commercial and abuse liability. Not a laughing matter, but it is one of those areas, especially in the performing arts, where we're seeing a lot of, I guess,
injuries, personal injuries, like
injuries.
bodily injuries, where you can have somebody injured while working.
True. And then, we also get into not just necessarily the physical, but also the mental anguish or emotional distress that comes with that. Again, claims can be brought by employees, volunteers, patrons, members, participants, other third parties. When we're talking about other programs and services, there is
education.
Yeah, there is always an issue, especially depending on what type of performances you're doing. The abuse is also a very common element, which we've touched upon before. We're trying to expand with some partners in terms of best practices. But yeah, it is an area where you always want to be aware. And some of the areas that we look at to protect a board or an organization would be protocols and procedures.
We missed one. We're going to go back to that one. When you get into the bodily injury, obviously in any organization, Rob had mentioned fundraising events, different programs, and that this is going to be as simple as your slips and your falls. But obviously, when you are doing events, there is a liquor liability. Or if you have a liquor license of your own and you're serving, then obviously the liquor liability, it does present you with an exposure as well. And this claim scenario we're going to talk about is a very interesting one. Do you want me to read it?
Yeah, no, I got it.
Okay.
So a performing arts venue serves pre-show and intermission drinks to a patron attending a show. Prior to the show, the patron had been drinking at a bar, and then after leaving the venue, the patron visited 2 bars where they continued to drink. In the early morning hours, the patron sustained serious injuries after a fall from a significant height. The patron brings a legal claim against the 3 bars and the venue, alleging they, the patron, had been overserved. So my opinion, this is a very, very common, right?
Yeah.
If you know anything about pre-drinking, or if you know anything about pre-performance, after the performance, everyone should be very familiar with this scenario. Maybe not necessarily the claim
To the extreme,
but definitely, the organizations that are being brought, not necessarily the 3 bars themselves, but also the patron slipping and falling and sustaining injuries. It's not uncommon.
No, and I think it shows you here that there can be a sequence. There can be a chain that's taken place here where there was pre-drinks before the show. There was perhaps like outside of the venue establishment itself, in the venue, and then following that. And essentially what's happened here is that all of the parties in that chain have been brought in on this claim.
Yeah, because you can never really tell where was he overserved, where did the actual incident happen. Obviously,
right.
The slip, trip, and fall, you'd easily be able to tell he fell there, but was it because he was overserved at bar A, bar B, bar C? I mean, at that point, it's impossible to tell, right?
So it's important making sure at events and that you are using properly certified servers, or if you're using a company to provide those services, that you make sure that they have some insurance as well. Because we don't know, you don't know in these cases where the liability is going to lie. But again, to my point about joint and several liability, it really doesn't matter, because if you're in it, you're going to be one of several parties ultimately responsible for the claim.
Those defense costs.
Yeah.
So I can expand on this where we talk about, again, I had mentioned crime, cyber, and privacy breach. Again, it's very similar to the uptake we've seen in employment practices claims. These 3 areas we're finding are becoming synonymous with, potential claims, very sophisticated claims as well, especially when you're dealing with employee fraud, theft of money, property expenses. Again, these might not be found out for years, depending on when you've got long-term accountants, or if you've never used an independent third party to audit your financials. It's possible that an employee could be siphoning funds without your knowledge. Cybercrime, malware, ransomware, if anybody's ever opened up an email, odds are you've probably received some sort of spamware. I am not a Nigerian prince. I do not need ransom. However, if you want to send me some money, feel free. I think I'm getting a lot more calls from Canada Revenue. My SIN number's been, I don't know, pilfered or something wrong with it. So press 1 if I need issues. But regardless, we're seeing a big uptake on those type of claims. Privacy is also a very big issue right now, especially when we're dealing with younger children, especially when we're dealing with people's personal information, payment information. Breach of network systems and access to people's information is, again, not uncommon. Once you, again, these cyber hackers are becoming very, very sophisticated, and it's just a little bit of education sometimes does go a long way with regards to some of these claims or incidences.
And it's interesting because you can look at these things from an insurance perspective as well, but some of these things, by implementing just good internal practices for managing.
Yeah, true.
When it comes to cybercrime, the phishing attempts to have somebody transfer money or to do something, that a fraud, that a perpetrator is trying to victimize them on. Just having a good, I love the expression, the human firewall in an organization, having a good human firewall, people thinking, questioning, making a phone call to say, did you actually ask me to do this? These are all little things.
Yeah, you would think it's very common practice, but sometimes a newer employee or an employee who maybe doesn't know the mannerisms of who's making the request, maybe it's being
A senior person.
delivered from a senior person. They're like, well, he's asking me to transfer this money, I better do it right away, without actually doing the due diligence to question, why am I being asked, and should I do this?
So we'll go, we've got about 10 more minutes of time here. So we're gonna kind of quickly go through this claims example that relates to private information.
An organization embarks on
Oh, sorry, no, my mistake. I'm sorry.
That's okay.
It's an employee dishonesty one.
An organization embarks on an exciting capital campaign to renovate their property. The project was funded by various levels of government, corporate, and private donors. Working with minimal staff, the non-for-profit is unable to completely segregate duties for managing the project, duties, and funds. By chance, another staff member questions an invoice paid to a company that turns out to be a quote-unquote dummy company set up by the other employee managing funds to steal money from the non-for-profit. Forensic accounting discloses multiple payments had been made. And this is a little bit more what I was talking about, the crime, employee dishonesty, employee fraud.
Yeah, these are always the death by 1,000 cuts in many cases with employee dishonesty, is that an employee will start very small. They will then build as their confidence grows. They often say that they can be very loyal employees that will do these things, people who don't take vacation. There's a real profile that, and
there's a lot of commonalities.
Yeah,
right?
there are. You'll often see a lot of commonalities when you get these. And it's important, if you are embarking on a capital campaign where there's a lot of cash flowing, there's a lot of different invoicing happening, having different people who are making the payables, who are reconciling accounts, who are balancing these funds. It's important to segregate those things so that you've got different sets of eyes looking at it. And this example is just one of many that have taken place in both the private corporate world and the not-for-profit world, where somebody does something, sets up a scheme basically that works, and then they continue to work that system until they ultimately get caught. This is the privacy.
It's the one. A large theater serving several arts organizations experiences an unauthorized computer security breach, which forces a shutdown of their system. It prevents the purchase of tickets, and the breach presents the risk of unauthorized access to the personally identifiable information of buyers, and may include information for employees and contracted performers and artists. There are losses of revenue and costs associated with protecting their IT systems and managing the potential of the data being used to exploit the accessed information.
So yeah, so here you're getting into the breach of private information. Who knows what's going to happen with that, and how that may down the road harm the individual whose data that belongs to. You've also got the cost of managing what you now do, because when you have a breach like this, the privacy commissions, they require that you do certain things. You do notification, there may be credit monitoring that you have to put in place for those individuals.
It's typically registered mail,
lots
notification.
Of
Each province, I think, has a specific rule or regulation as well. The costs can sometimes be astounding depending on how many people have been affected. And again, when you're dealing with privacy, let's not think of just the non-for-profit, although that's what we're talking about today, but companies as large as Sony or Equifax have all been affected by breaches of personal information.
And then this also has, the fallout of an interruption in how you're doing your business, your ability to sell tickets, it's been affected. And then you can also have reputational issues that come along after a breach as well. So we've got about 9 minutes, so we're going to skip along fairly quickly at this point, I think. The personal injury and intellectual property coverage deals with infringements of copyright, could be music, literary works, trademark infringement, other educational works, plagiarism, piracy, and other digital content, failing to obtain proper rights if you're using somebody's name or likeness, and defamation and libel and slander. So these can happen in a variety of different ways in an arts organization. Could be the commissioning of a work, it could be using somebody. We have a claims example here of using a celebrity without their consent, and then all of a sudden running into a problem with that. So this one that I referred to is a charity engaged a music celebrity to perform at a benefit concert, but neglects to solicit the performer's agreement to perform and endorse the charity. In marketing the concert, the charity promotes the event, creating the public impression that the performer supports the charity. After learning of the organization's cause, the performer declines to perform and the event is canceled. Charity must refund the money raised and pay the event expenses. So huge expense to the organization. While there wasn't a legal claim in this particular case, the charity sustained a significant financial loss.
Yeah, absolutely.
Having obviously committed to all the expenses of the show and then having no revenue to their benefit. If you're looking at your own insurance, these are things that, and you'll have the deck after the webinar available to you, and I'd encourage you, if you have your own policy right now for management liability or any of these are good questions for you to ask. Who's covered by the policy? How does it respond to legal fees? How much of the legal fees are going to be covered? Does your insurance company have an obligation to defend you and to pay those costs for you? This is a big one, because funding some of these legal expenses can be a real financial burden on a not-for-profit organization. So you need to ask yourself, is the insurance company going to be paying those on our behalf or not? Severability of exclusions. How does the exclusion apply? Does it apply to everybody, all the individuals, the organization? And how much insurance do you need? Per claim, how much is available in a total amount for all claims? You know, this is where we talked about interrelated claims with multiple claimants. That's a good thing to think about when you're thinking about your amount of insurance. And then looking at your insurance company, you know, do they have a specialty focus? What's their claims philosophy, and how do they work with not-for-profits? There's a number of insurers in Canada that have a very specialized focus on not-for-profits. You can buy a not-for-profit management liability from just about any insurance company, but you know, we recommend, and we tend to deal with companies, that this is one mainstay of what they do, so that they are really
like
well equipped.
Focus,
specialty company. Yeah. Additional considerations to look at: how does it address bodily injury, pollution, claims from non-employees, a hammer clause? I'll mention what a hammer clause is. A hammer clause is just whether you would require your insurance company to consent to the settlement of a claim. Obviously, these are personal claims for an organization. They may not want a claim to be settled because of the implications it could have on their reputation or their future dealings.
Or just even simply, from my experience, they say, well, we're not guilty of this, so we want to take the claim to fruition.
Yeah.
Whereas an insurance company may be imploring them to settle because it's obviously, you know, in some cases cost effective.
That's right.
But a client might say, no, I'm innocent of this. I pay my premiums. I want to take this to the limit. So I execute my right, which is, I think, fair.
So by the insurance company having a hammer clause, it essentially means they have a hammer where they say, you're on your own if you don't settle now.
True.
Our program, and the BC Alliance program, doesn't have the hammer clause, so it's very favorable to a BC Arts Alliance member with respect to when it comes to settling a claim. Board governance and reducing risks. I can't stress enough having good communication, documenting things like minutes, documenting your procedures, your protocols internally with respect to workplace behavior, what's acceptable, what's not acceptable. Having laid out hiring practices, having a complaint process so that these, as we talked about earlier, the investigations, so that they are handled consistently with every complaint, and that they are handled in a fair and unbiased manner as you can possibly do. Meetings that are organized, agendas, again, documenting meetings, making sure people are attending meetings, making sure if you've got a board member, for instance, that misses most of the meetings, that you deal with that, you manage it. Make sure you always encourage people to ask questions and be diligent. And when you're into something complex, and again, I know it's often a financial consideration, but the issue being, seek the advice of consultants, experts. Some of the things that a board are being asked to consider are very complex. They might be technical, and it's important that you can demonstrate that as a group and as individuals, you made a well-informed decision. Going back to the duty of care.
True, yeah,
and
right
again,
from the beginning.
The whole business judgment rule. We took in this information. we made a decision that was the best decision we could possibly make at that point. And then also discretion on sensitive matters. Again, can go over to what we were talking about with respect to private information and privacy breach. Ultimately could be defamation claim, discrimination claim, something of that nature. These are important to look at when you're considering changing insurance companies. The way that management liability policy is done, it's a claims made form, and it simply means that only claims are paid if they're made within the policy period. So you don't ever want to necessarily just simply cancel policy. You have to think carefully about any prior knowledge of potential claims.
I think continuity there.
Continuity is huge.
You've talked about gaps in terms of switching insurances, especially when you're dealing with from occurrence to claims made. You want to make sure there's no gap. We've isolated at the bottom there retroactive or extended reporting periods. Retroactive being from the first inception date of an actual policy, and then
the first policy.
And then extended reporting period in the event that the board dissolves. There again, similar to one of those claim scenarios, there could still be decisions later on that affecting the current board.
The BC Alliance program is underwritten by Trisura Guarantee, and Trisura is a company that we use extensively in our not-for-profit portfolio. This has been designed to provide very, very broad coverage. In fact, it's as broad as any organization's policy that we have in our portfolio. Premiums are very affordable, and they are scaled to the size of your organization, which is good. It's not a one-size-fits-all when it comes to premium. Coverage is very sophisticated for employees, volunteers, your spouses, your domestic partners. It does include the discrimination and harassment coverage when brought by other individuals. The deductibles are manageable. They're on the employment practices, and we don't have a deductible for other types of claims. And it really is a very simple process. There's an application form. It's very easy to follow through. Information is available through the BC Alliance website. And then, of course, we're always available to answer any questions that you may have. Grant?
All right, thanks, Steve and Rob. That was great, very informative. So if there are any more questions, we probably have one more minute that we can take some, maybe one more question right now.
So
at the end of the webinar. Yeah. But we did answer a couple questions throughout, so thanks for sending those in.
Thank you.
And if you would like to contact us, or if we don't have time to answer everything here on this webinar today, those are the email addresses there. You could contact Steve or Rob directly, or the BC Alliance. Brenda and Beverly will be there to answer your questions as well. And so consider following Front Row Insurance on Facebook and or Twitter, please. And so just to finalize things here, thanks, Steve and Rob, for an informative presentation. And of course, big thanks to the BC Alliance for Arts and Culture for partnering with us on today's webinar. The webinar has been recorded, and it will be put up on YouTube, and that will be made available on Front Row's YouTube channel. If you just check that out, you can find it there afterwards. And assuming the feedback on this webinar is positive, we would plan to do more webinars in partnership with BC Alliance in the future, likely. So be on the lookout for those. And I see that there aren't any further questions right now, so I'll close out the webinar. Thanks for listening, everyone, and have a good day.
Thank you.